You're on Twitter and you see someone going like, "Oh my God, it's below the 50-day or 50-week moving average. I'm selling everything." But like, if you're just an average retail person who doesn't trade, that doesn't matter to you.
What's up, everybody? It's LG Doucette here, and welcome to the Milk Road Show, the daily crypto show that explains why the charts look broken, the vibes look awful, and somehow we are still here and actually bullish long term. Today is November 17th. Bitcoin is below 94,000, if you can believe it. ETH is just holding at 3,100, and Solana is below 135. And to explain just what the hell's going on, we are joined by Kyle Reidhead, co-owner of Milk Road and one of the sharpest brains we have in the house. Crypto feels kind of weird right now. Prices don't feel like they're going anywhere. The narratives aren't sticking. And even our experts are sometimes scratching their heads. So he's here to break down why the market is stuck, how macro and AI are shifting the landscape, and moves he is actually potentially looking at in this super weird market. Today's episode is brought to you by Blocktrust IRA. Let AI outsmart the market and grow your crypto while you sleep. Bridge, power your business with instant stablecoin payments, no friction, no banks, just global finance made simple. And Figure Markets, earn solid returns on your cash because sitting idle isn't a strategy. Here he is, Kyle. Dude, what is going on, man? Welcome back to the show. I think you were just here last week, but I always love having you on.
Thanks, LG. Happy to be here. You know, it's crazy to say if you can believe that it's under 94K. I was here in this space when Bitcoin was at 3,000. So the fact that it's at 94,000 is actually something that I can barely believe. So I guess it's all just perspective.
That's it. You zoom out to the bear market. We would have loved to be here. You told us that 3 years ago. This would have been amazing to be. But Kyle, tell me, man, like just everybody wants to know what the hell's going on? What is happening to this market? Why does crypto feel like so stuck and kind of hard to explain right now? And is there like any real reasons why the market's chopping sideways?
Yeah, I think there's a lot of reasons. When the markets get like this, I look at two things. So first is I look at, well, what's the macro backdrop saying? Is that setting us up for a good backdrop or a bad backdrop, right? Maybe this has nothing to do with crypto at all. Maybe it's just the macro world. So I look there. Then the other thing I look at is just the crypto space in general. What's adoption look like? What's the the curve of like, is it exponential? Is it growing? Is it not growing? Is there good things happening, not good things? So you kind of just look at the space overall and to try to tell you what's going on in the crypto space, because maybe it's just, you can see it's different than if you look at Bitcoin versus gold. It's kind of, going the opposite way. If you look at crypto versus stocks, it's kind of going the opposite way. So you're like, is this a macro issue or is this just an issue with crypto? And then you kind of try to parse it out between the two and figure out what the heck is going on, which look, is not an easy thing. Obviously, we've been bullish all Q4. That has turned out to be wrong so far. There's still about a month and a half left. So I guess you never really know what happens or what will happen. But so far, things obviously do not look good. If we kind of dive into why that is, and I would say when I say they don't look good because of the charts, right? Obviously, if you're looking at the charts all day, it's very, very red. I'll even bring up my chart just to give some context here. If I can just share this.
Please do.
Here's the Bitcoin chart. Funny enough, last week I actually said, hey, I don't think it looks bad enough. Things are bad, but I don't think we should rock it. Everyone was like, oh, government's going to open up. It's time for us to go up. And I said, you know what? I think we got to get down to 92 or 93. We need more fear in the markets is basically what I said. And the reason was the fear and greed index chart didn't quite make it into the red, as you can see down here, like it did during the tariff moments back in April. We kind of touched it, but barely. And I was like, you know what? Before we go up, we're probably going to need to go back down even more and get a little bit more fear, which I think we hit that over the weekend. It feels like, the everyone's pretty scared now. A lot of people are kind of pivoting. So I also said 92.93. I've got this white line here. We are right on it. We touched it over the weekend. I guess this is, over the weekend, closed right on it, and now we're sitting at it. Now, it still doesn't look good, right? You'd expect a big bounce off this. We're not getting that. Now, the question is why? I think two reasons. Let's start on the macro side, then we'll dive into crypto. On the macro side of things, there's a lot of confusion right now, right? People don't really know what's going on because, one, we don't have any data, right? We haven't had an inflation print for October, which we were supposed to have. We don't have any like jobs or unemployment data. There's just a lot of things that we don't have because the government's been closed for whatever it was, 40 days or something. So there's this like fear of, well, I don't know what's going on in the markets. And so I'm going to continue to let that fear spiral and spiral and spiral because there's no news and there's no data to tell you otherwise, right? So I think the odds of a rate cut in December have now gone from what were like pretty close to 100% down to, I think it's a 50-50 chance right now. So on the macro side of things, there's a lot of people just thinking, hey, unemployment's going to be way higher. and inflation is going to be way higher, and so they can't cut rates, and so we're definitely not going to cut moving forward. So I think that's kind of the at least the perspective of most people. I really don't think that inflation is, as I've been saying all along, is as bad as people think. I think we might actually be flat, if not even lower, whenever we get our next inflation print, because of this sort of growth scare we had between the U.S. and China. Also because the economy is, I mean, the economy is good in some parts, but the economy is not so great in other parts. So it feels like there's just this kind of battle there. But like the biggest things that move inflation is like oil, which has not gone up at all. If anything, it's gone down. I can even show the chart here. Like here's oil, which is currently sitting at 60. So it's gone down and down and down all year. So that looks good. And then the other thing is if you look at like shelter, which is the biggest part of CPI, that's only gone down. So meaning rents and mortgages, or not mortgages, but like the value of people's homes. So that has just gone down. So the biggest components of inflation are down. So I just don't really understand why everyone is so afraid of inflation right now. So there's just a lot of confusion on that side of thing. And then if you look at the even bigger backdrop, which is a lot of these governments are in the middle of cutting rates and running their economies hot. This is not just the US, but China and Japan. And so just like, I don't know, the macro backdrop to me doesn't look so bad. And then the other side of it, I would say, and we'll probably touch on this in a little bit, which is AI is macro at the moment, right? Like AI is just kind of controlling everything. And there's a lot of fears around this AI bubble, which I think we'll probably get to later in the show. My prediction or kind of my thinking around this right now is that we are not in a top of a bubble, but we are in a bit of a reordering or restructuring or rebalancing of what people hold in those assets. So we can talk about that later, but I just think the market needs to digest a lot of random things right now. And so it's just, and then there's the 4-year cycle thing, right? Everyone thinks, well, because it's 4 years for whatever reason, it's got to be over. So the market's got to kind of work its way through that too. So there's a lot of things for the market, I think, to just kind of figure out, and that'll just take time.
Kyle, you mentioned the 4-year cycle, and so many people are attached to that. Who are these people that are attached to that? Are you telling me the people that control like prices of Bitcoin and ETH, those huge funds, that they're the ones that are worried about a 4-year cycle at this point? Aren't they smarter than that?
Well, I just think you have a lot of Bitcoin OGs who've been around a long time. They've been holding Bitcoin. Like I said, I'm surprised we're at 94K, not the other way around. And so there's just a lot of people that have literally hundreds of millions to billions of dollars in Bitcoin that are like, okay, we're sitting here at 100K, 125K a few weeks or months ago, whatever. And I think they're like, hey, you know what? I should probably not just have 100% of my net worth in Bitcoin. And so they're beginning to diversify their portfolio, right? Which is not a bad thing. Similar to what I was just saying in AI, how there's kind of a rebalancing there. There's a lot of people who've holding the majors like Nvidia and Apple and Google, et cetera. These things are like $5 trillion companies now. And they're like, you know what? Maybe it's time to start to buy something else and rebalance a little bit. And so I don't think that necessarily means we go into some sort of crazy bear market as a result of this rebalancing. But I do think, we've had a bit in a bull market since January 2023. I know a lot of people that have been holding alts and meme coins this entire time don't feel like that. But if you've been holding good assets, then absolutely, we've been in a bull market this entire time. And so they need to take some profits. They need to rotate, diversify, whatever that might be. So that seems natural, makes sense. Doesn't necessarily mean that we're going to have some long drawn out bear market as a result of that. That generally comes because of macro reasons, whether it be the business cycle or liquidity or interest rates, not because there's some big players that are deciding to diversify.
I want to touch on your inflation point as well, Kyle. You did say that you're not as worried about inflation. And we also wanted to go over this tweet from the Kobesi letter that's giving us a lot of reasons potential for inflation, right? So I think I want to get your thoughts there, just kind of clarify that, because there are potential US $2,000 stimulus checks in the US, which may or may not happen. Stimulus packages for Japan, China, quantitative tightening is ending on December 1st. There's that TGA, like the Treasury that has like $1 trillion that's going to come in, and lots of other reasons that could see a lot of money come into the market. And these guys are saying, in what world is another wave of inflation not on its way? How does that kind of juxtapose with kind of what you're saying about the CPI?
Yeah, absolutely. So CPI is looking at inflation specifically in the US. So like a stimulus package in Japan or in China isn't I mean, in some ways it does impact it, but a lot less than if the US was doing a huge QE, which they're not currently, right? And then the, $2,000 stimulus check, yeah, that might bring some inflation like we saw in 2021. But remember, that was a bunch of stimulus checks. And also, we don't know if this is actually going to happen. Scott Besson already came in and said probably won't be like just a random handout check. It might just be like a forgiveness on their taxes. Like we don't know in which route this is going to come. So I don't think that necessarily is fully like, hey, we're just going to give all this money in trillions amount to all these different countries. It doesn't necessarily pan out that way yet. I think there are versions of stimulus that are happening, but in certain sectors. So I think they can be a little bit more strategic about it. I also think you have AI, which is doing massive things to help on the inflation side of things in some areas, also maybe worse in some areas. So I think that is lowering things. You have this sort of K-shaped economy where a lot of the even if they do these stimulus packages, there's still a lot of the world that has most of their money in their homes, if that, in student loans, et cetera. And they're not buying much because they're not making a shit ton of money. And so there's just not a lot of ways that I think inflation is going to necessarily spike or at least get out of control. Again, I've said this entire year, inflation should go up, but just very minimal, which is exactly what it's done. The fear is really, will inflation jump and spike up to like 5, 6, 7, 8, 9, like we had in 2020 and 2021? I don't see that world happening right now. It just doesn't make sense. And then the last month of this sort of growth scare that we've been having, that's going to push down inflation even further. And then rates have been fairly high, which means not a lot of people can afford to buy homes, which means the price of our homes and rent is going down. That's been happening for a while now. And that's the biggest component of CPI. So there's a lot of reasons why it doesn't really make sense that inflation will go crazy high. Again, I'm not saying it won't go up. Generally, in a business cycle, when the economy is expanding, inflation will go up, and I expect that to happen. I want that to happen because that means good things. It means growth is happening. Again, the key is, does it spike like crazy? And there's just doesn't seem to be any reason for that. Now, if we get a bunch of $2,000 stimulus checks, sure, that might spike inflation. But before that happens, they're going to have to spend those stimulus checks, which means stocks and crypto are going to go up like crazy before that happens. And then we need to react to that. It's not like the central bank or government is ever ahead of inflation, right? We're always lagging and way behind things. And so there's a lot of things that need to happen before a lot of the stuff on the Kawasi letter there is going to impact anything. And so I agree, inflation will likely go up in the future. It's just not going to be that bad. And if it is that bad because of the things they're pointing out, the markets are going to go way higher before that happens.
Yeah, exactly. Bullish for crypto. Hopefully, before any of that takes place. And I want to bring it back to crypto as well, Kyle. Before we're kind of spiraling into macro AI, which we will come back to very shortly. But I'd love to know what's happening to the trend. Are we still in an uptrend? Is that trend intact? Because everywhere I look on crypto Twitter, including people, I see people like Ben Cohen telling me about death crosses and things that I feel like I only see at scary times when the greed fear index is below 10 or below 20 or whatever we're at. What's happening with our market structure?
Yeah, so this week was, if you're a technical analyst, was not great. And so what I brought up here on the screen, as you can see, this green line, which is your 50-week moving average. We went below it 2 weeks ago, but we came back. We actually didn't close below it. So everyone's like, yes, we survived. We're going to continue to make it. The bull market continues. And then this week we closed below it on Sunday, and now everyone thinks that it's over and we're in a bear market and it's done. And the reason why is, if you look at 2023, excluding down here at the bottom, twice we've gone below the 50 moving average, but we've never closed below it, right? At least in this current bull market, we've never closed below it. Now, that's not to say that we've never closed below it in the middle of a bull market. In 2020, we closed below the 50-day moving average multiple times for multiple weeks, in fact, multiple months. And yet the bull market continued on to new highs soon thereafter. In 2020, we were in the middle of a bull market. The bear market ended around 2019. Obviously, COVID came in. We closed multiple times before COVID and after COVID below the 50-week moving average, and yet no issues. We ended up in a raging, absolute wild bull market, right? So I just don't know why so many people think, oh, we closed below 50 moving average, that's it. Close your computers, sell all your assets, come back in a year's time. That's just never been the case. Like, sometimes it doesn't go below, and sometimes it does go below. Sometimes when we go below, it means a bear market, like here, but it didn't mean it here or here. So why is it that this time it has to be it? Even the NASDAQ, right? Like, let's look at the NASDAQ for a second here. It closed for an entire month, over a month below the 50-day or 50-week moving average this freaking year in 2025. And yet, look at how much higher the NASDAQ is versus when we closed below and everyone said there was going to be this crazy bear market, which didn't end up happening. So I just think this technical analysis stuff matters, but it doesn't always matter. It's not that big of a deal, in my opinion. Like, it's good to watch, but I just don't think it means, like, it's not 100%, right? But right now you have everyone screaming saying, okay, we're below the 50-week moving average, so this must be a bear market. It's cooked. The 4-year cycle is intact, and we're done for a year. It just doesn't make a lot of sense, in my opinion, because there's just so many times where it hasn't shown that that is true. And even this year, it's shown that. So I just don't understand why everyone is so fully obsessed over that. Now, it doesn't look great. Don't get me wrong. Like, go back. Here you go. We're under 93,000 right now as we talk. So this obviously does not look good. Don't get me wrong. And to be fair, I've been saying for a while now that I'm not overly bullish on crypto, specifically a lot of the altcoins, right? Because I think a lot of it is just uninvestable. I think last time I was on the podcast with you, LG, we sort of went through this. And so what I really like to look at is, like, what is the adoption of crypto right now? And so I really think that what you want to look at is not like users and things, but instead I want to look at how many assets are coming on chain. And so this RWA.XYZ is a great chart to sort of give you the idea of, because in order for crypto to be valuable, we need to bring the current financial system on chain, which means all the financial assets that currently exist, whether that be dollars, stocks, private credit, gold, et cetera, that's where all the world's capital is, right? The liquidity all exists in stocks, it exists in dollars or fiat currencies, it exists in gold. There's trillions and trillions of that. We need to bring all that on chain, and that'll make the crypto assets that we have more useful, right? More valuable. That'll make them go up, right? That'll make Sky as a savings platform way, way, way more valuable because there's more assets you can put into that system. That'll make ETH and Sol way more valuable because they can be collateral and they can be, trustless money on ecosystems that have trillions and trillions of assets on them. And so, these numbers look good. To be fair, though, they don't look amazing, right? When I want to see growth, what I want to see in a company or an industry that's growing, you want to see exponential growth. And honestly, we are not there yet. This is growth, but it's very small. Like, we're talking a couple billion a week in terms of, like, all real world assets coming on chain. That's actually quite small. Like, if you were to value or look at, like, let's say an AI company or just any tech company, social media, AI, like whatever it is, you're looking for exponential growth that is way, way, way bigger than that. And so as much as this is exciting, it's not actually that much. And so this is why I've been so vocal for the last while, saying, like, I don't really see a reason for a lot of the crypto space to go up, right? Bitcoin is different. Obviously, it is more of a store of value. It is something similar to gold. So I am surprised to see Bitcoin where it is today. But the rest of the industry, I actually am not that surprised. A lot of it, as I said, is uninvestable. A lot of the institutions and the capital out there can't buy this stuff. And then its adoption is not that fast today. And so I've been a big proponent of saying we need the market structure bill before we're really going to see any momentum, in my opinion, in the crypto space, X, Bitcoin and ETH, and maybe Solana, because they've kind of crossed the chasm and are available in public markets. But even that, the story for ETH and Sol is not that great until these charts are really, really taking off. And so right now they're not. And I think the big reason for that is market structure. So until we get that, I think that you're going to continue to see crypto bleed versus the broader market. But if we bring it back to the bull market, like, just don't look at crypto for a second and look at, I don't know, the NASDAQ or the S&P. Does this really look like a bull market is ending and we're in a bear market? Like, what? It looks completely like there's nothing there. We're down like 5%. It's up on the day, right? And then the S&P 500, like, it just looks so average, so normal to what it's been doing all year. So I just don't know why everyone is up in arms. Now, again, I know crypto is lagging. That's a different story. But until we get market structure bill, that's probably just going to continue.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic sell or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by 250%. Visit milkroad.com/Blocktrust IRA today to get up to $2,500 in bonus crypto and transform your investment strategy. Stablecoins are the biggest use case in crypto right now, but let's be real, using them on chain is still way too complex. That's exactly the problem Bridge is solving. Recently acquired by Stripe, yep, that's Stripe, Bridge helps businesses send, store, accept, and launch stablecoins instantly. Explore the future of global financial infrastructure at milkroad.com/bridge.
So from what I'm understanding, just to kind of recap your point, which was excellent, is that the 50-week EMA is having people freak out because we closed under it, and people don't like that, right? And we clearly don't have much else to hang on to. I think if you're just a crypto person, right, and you expected massive gains at this point, correct, right? And if you're hanging on to 4-year cycle, go back to your previous answer. This is a danger territory for you. But if you look historically, it's not that big of a deal, and also all other assets that should go up with the economy, like the S&P and other slightly risky assets, their structure is still intact, similar to Bitcoin. That's basically what you're telling me. And that the part where you are maybe not so bullish is in things outside of Bitcoin and anything that isn't going to be part of RWAs coming on chain, right? That is basically anything that's not kind of part of those things, that isn't like a heavy utility for RWAs and isn't just the net normal store of value in Bitcoin. It's kind of hard to make larger bull cases for.
Rather than saying the RWAs, I think the better way to put it is just the old financial system, bringing that on chain, right? So what assets are going to help be a part of that? That's your Ethereum, your Solana, your Sky, your Aave, etc. Those things are going to do what? Your Coinbase, your Galaxy, right? Like as institutions come on chain, where do they go? They go to Coinbase and Galaxy. So I think these companies are going to do incredible as they are the big companies that benefit from the whole world moving on chain. And so I remain very bullish on that sector over time. But again, you got to remember, this is a long drawn out process, and it's a long drawn out secular trend, which right now is halted because we just don't have clear regulation, which we've known this for a long time. And so do I think that macro is cooked and all markets are cooked? Absolutely not. And I say that because of what I just explained on the macro. And then if you just look at the stock market, everything looks fine in the stock market. Can we get a bigger pullback? Absolutely. It's only been 6%. This is nothing, right? And so this tells you bull market's still intact. The main issue I think that we're having right now is just crypto doesn't have a structural bid because we don't have massive adoption there yet because we don't have a market structure built. And so it doesn't mean that I'm super bearish on crypto for forever. I'm very excited for crypto. Of course, I've been bullish on this sector for a very long time. I just think we need some clarity so that capital can start to come in. And so I want to remain allocated to it because I think that could happen at any moment. Could happen this year, could happen by January, February. Like I don't know when it's going to happen. But when it does, I imagine we're going to see that trend really start to pick up, and then it's going to go exponential, and you want to be allocated to that. You don't want to be out of the market for that. And so that's the big thing. But that's also just why I think you just need to hold majors because they're not going to go down as bad. Bitcoin's only down 25% right now. That's not a big deal to me. Again, you got to depend on, are you a trader or an investor? And I think this is where people get kind of mixed up. You're on Twitter and you see someone going like, oh my God, it's below the 50-day or 50-week moving average. I'm selling everything. But like, if you're just an average retail person who doesn't trade, that doesn't matter to you, right? As long as the trend is still intact, then what's the point in trading? Because that person's going to buy back in 3 weeks from now. But are you, as a retail investor, is that what you're doing? Are you trading your entire portfolio? Like, probably not. I know I'm not. And so when I look at this, I go, yeah, doesn't look good right now. But like, well, I get paid this Friday. I'll buy some more. And I'll continue to hold on because I don't think that crypto is going anywhere, right? It's not going to go to zero. And I just don't really see a reason for a long drawn out bear market here because there's just too good of a macro backdrop. Plus, there's the catalyst of a market structure bill where everything all of a sudden comes on chain. Perfect.
Before we jump to AI, Kyle, because I think that's what kind of how we want to wrap this up too, and allocate a large portion to AI. Very quickly, I want to ask you about some of that sentiment on Twitter and some of those headlines you see. We see this all the time. We've seen it all year. We even have people come on the show and talk about these price targets, right? And I think that it's so obviously it draws the eye when you see things like JP Morgan predicts Bitcoin 250 by the end of the year or middle of next year. How do you react to those? You don't really throw, you don't throw darts at the board like that, which I think is really smart. But how do you react to those? And why do those exist? Why do smart people like JP Morgan or smart firms or whatever, why do they say that stuff that then just, I think it makes retail people go completely berserk when it doesn't happen?
Yeah. So I think the reason why those come out is they're part of a longer, bigger report that people don't read. They just see the headline, right? Like when we do reports at Milk Road in Milk Road Pro, we also do not price predictions, but expectations. Because we kind of look at it and go, okay, here's the company, here's its current revenue that it's making, here's its current profit, here's its current valuation. Based on that, where do we think it would go? And we kind of project out, well, in a year, 2 years, 3 years, here's where the revenues could go. And thus, if we look at the same price to earnings ratio, the valuation should be X, right? And that gives us sort of a bear, bull, and neutral case about the asset that we're investing in. So that way, when we buy it, we're going in with a game plan where we kind of have an idea. We're not actually thinking it's going to go to that price, right? It's just we've done some, back the napkin math and kind of like valued it out, and that's where we got to. I'm like, okay, well, it looks like it could 10x in the next 2 years, right? And the downside is only X, and so it's a 1 to 10 risk reward. It makes sense. Let's go for that, right? That's a fat pitch we want to go after. The problem is that I think media takes those, screenshots it, and says, hey, JP Morgan thinks it's going to this. And they don't actually think it's going there. It's just their bull case. If everything goes well, it could go there. But then they also have one that they don't screenshot and share in their headline, which is if everything doesn't go well, it could go here, right? And so I think people get too stuck on those. In our Discord, in our Pro Discord, people ask all the time, about price predictions, and do we think it's going to go to this, or what price are we selling at? And I always say, I don't sell at any specific price. That's not what we look at. We look at, is the trend slowing down or growing? And is the macro backdrop getting better and improving, or is it getting worse, right? And so price action doesn't really matter that much if you're investing for longer than 6 months to a year. Like, the problem is if you're investing right now expecting to buy a home with that money in like 3 months, well, yeah, maybe you should have sold the top, right? Which good luck trying to do. And if you're investing money to buy a house in 3 months from now, don't invest that money. Probably just put it in something that's going to get you a little bit of yield, because market, especially in crypto, because markets are very volatile. But if you're looking out long enough, then it doesn't really matter. What you want to say is there more capital and more risk going to be taken over the next year or two, or going to be less? And in my opinion, the way the macro backdrop is looking is it looks like there's going to be more. And so does that mean Bitcoin will end up going to 150 or 200 or 250 or 300? I have no fucking idea. And I actually don't really care. The only thing I care about is, when do I think that people are going to stop taking risk and are going to want to go into, kind of a defensive side of things, which I just don't think we're there for the long term. I think, yeah, people are obviously going defensive right now, but I don't think that it is a 6-12 month situation. I think it is just a confusion around markets, which happens all the time. I mean, we've had one of these pullbacks in, what was it, April of this year? We had one in August of last year. We had one in March the year before that. Like, we have these all the time, once or twice a year at least. And so I just think we're in a normal correction, which is not a reason for me to start making moves or change my price predictions or whatever.
The catalyst for the turnarounds or the pumps the last 2 times were the election and then the bottom of the tariffs. Is there anything specific, Kyle, this time around that you're looking for that you think is like, boom, that's the match?
Yeah, I don't know what's going to be the specific. Here's the thing. This one's been a weird pullback, or a different pullback, because we didn't really have this huge, we did have a huge liquidation event in October, but getting down to 92, 93, we sort of just grinded down there, right? And then we haven't had this huge bounce, back upwards either. And then same with AI, it's kind of grinded down a little bit here over the last few days. And, there's been no catalyst really to bring it back up, other than Warren Buffett bought $4 billion of Google over the weekend. So, that got people excited on the Google side. I think NVIDIA giving their earnings on Wednesday is going to be a big thing to hopefully calm the market back down. So everyone kind of realizes, hey, we can actually chill. The AI bubble has not popped. There's still a lot of demand here. So that'll just help systematic. Because here's the problem is, you have these kind of systematic flows. Thomas talks about these all the time on the Milk Road macro side of things. And when you hit certain numbers, these systematic flows start going the opposite way and selling. When you hit a certain number, they start buying, right? You also had, over the last month, the buyback period was in a blackout period in, I think it's November, end of October or whatever. And so a lot of the stocks haven't had buybacks on, but those get turned on here in December. And so the systemic stuff, I think, will start to come back, which should drive things higher. Whether that's this month or it's January, I don't know. Again, don't really care, but ultimately things still continue to look bullish behind the scenes, in my opinion.
Love it. I just want to take a quick minute to advertise you a little bit, Kyle, because if you guys want to ask Kyle more questions directly, you can do that in our Pro Discord. Kyle also wrote this. Hold on, I got to remove your screen. Here we go. Kyle also wrote this excellent report, just like at the start of the month, that was about the 4-year cycle and when to exit. So it gives a lot of Kyle's thoughts about kind of everything you guys just heard in terms of like when he's in and when he's out, and also summarizes a lot of the stuff he said, and kind of makes a nice case about why our like macro tailwinds are going to extend into 2026 and 2027, largely or heavily tied to AI. So that is a pro report that you can read only for pro members. And while we're talking AI, I also want to point you guys to this macro pro report that was written by Thomas around the same time. That is a novel of a report. It took me days to go through it and understand it from Thomas, but it's fantastic and gives this like amazing, massive picture of the global macro, but also kicks off with there is no AI bubble and the bull rally isn't over. That came out a few weeks ago. Still very much the theory. And even if you go over to our Crypto Pro Discord, you can even see people are asking Thomas these questions, and he's giving all the, like just such in-depth explanations about how this stuff works. It's a lot for me to even keep up with, but it's incredibly valuable. So for pro members only, you guys go over there and check that out. If you want to harass Kyle more and maybe eventually get him to give you a price prediction, then maybe he will, but only for pro members in Discord. That's the only place that's going to happen. But Kyle, let's definitely talk about AI. I mean, this is something you've been hot on. Last time you were on the show, that's exactly what we talked about is, hey, maybe cool it on the crypto alts and maybe start looking at AI. Since that time, we have launched a Milk Road AI podcast, which you can check out on YouTube. Tell me really quick your current thoughts, where AI is at, and why you're still like super bullish.
Yeah. So the reason why I think AI is so important is one, I mean, it's another secular trend like crypto, right? So the reason we're so excited about crypto and so bullish on crypto is we think that the whole, traditional financial system and all of its assets are about to move on chain. So obviously, there's going to be a ton of opportunities here. That's a massive change to the world, to how businesses work, to how money flows, to how assets work. So that's a huge, huge, huge secular trend, which is driven by the macro backdrop of fiat debasement. Okay, AI. Same thing. Okay. It is a massive technological innovation that is changing the way that humans work, both at their jobs, but also personally, changing the way that businesses work. It's changing absolutely everything about what we do, right? Because we're creating robots and self-driving vehicles, and we're using these AI chatbots that do a lot of things for us, help us think and strategize and run companies, etc. So like obviously that is changing the way that the world is functioning, but it's also changing the way that the macro backdrop is set up, because right now we are in an AI arms race globally to sort of win AI. And this is both from a company level. So think of like your Google and your Amazon and your Microsoft. They're all spent and Meta. They're spending tens of billions to hundreds of billions of dollars a year right now trying to win the AI race. And that means they need to buy land, they need to build data centers, they need to buy GPUs, they need energy sources to power all this, and then they need to create amazing technology around the data that they're capturing and the LLMs that they're creating. And there's a bunch of use cases and things you can build from that. So that has been happening for a number of years now. And it is continuing to pick up. That the spend that they are doing on all this is just growing and growing and growing. And it's getting to the point where it's actually becoming very important, not just for companies to do this, but same with countries. So the US and China are the two big ones here that they have, really focused on trying to make the conditions in their country better and more conducive to growing this AI sector and winning this AI sector, because it's a matter of national defense, really, right? If you think about if war is ever going to happen again, it's going to be AI and robots. It's not going to be humans. And so they need to win this. And so what's happening is the US is creating better regulations for companies to access energy or build energy. They are trying to bring manufacturing into their countries so they don't have bottlenecks of their data centers or of the commodities that are needed, the materials needed to build the data centers, for the chips, for the GPUs, for the energy, for everything, right? So the US and China are really doing this like massive rush into funding and changing regulations and basically trying to bring in talent from around the world to win this. And so that is really changing the macro backdrop, because not only is that a trillions of dollars of spend here that's happening and changing of regulations, which changes how the macro backdrop works, but it's also changing in terms of like how companies work, because right now companies' earnings are going through the roof, yet they're not really hiring because they're using AI and becoming more efficient. So like everything right now is changing because of AI. And I think that is where a lot of the confusion is coming in the markets, because people don't really understand what's going on. And then you add on top of that we don't have any data from the government anyway. Everyone's just like, what the fuck is going on? What is like, is unemployment going up or is it not? Are companies using AI or are they not? Is there a bubble or is there not? Like, there's just so many questions. And I think the latest that we sort of know, and again, this is why NVIDIA earnings is going to be so key, is there's been some delays on like some of the big data centers. So like CoreWeave, for example, these are the hyperscalers. There's been delays on when their centers will come online and when they'll get the companies that need them will actually get access to it. And so people are starting to think that this is the AI bubble popping or kind of slowing down. But I think what we're going to hear in the NVIDIA earnings is that, hey, demand is still absolutely massive. There is no concern here. Really, what's happening to kind of help people wrap their heads around what's going on in the space is that the innovation and the tech side of AI is growing so fast that it's creating so much demand that the physical side of it can't keep up. Meaning we can't build enough data centers or get enough power or even create enough GPUs or chips to actually supply the amount of demand that's going on in AI. And so Oracle and NVIDIA and all these guys that are creating the GPUs and the chips, they're sold out for like the next 5 years. And then it takes a long time to build data centers. These are massive, massive, massive buildings that require a lot of like physical commodities to build them. And that's just slow. That's hard to do. It's not like coding, right? Which is very fast and easy. And so we're actually slower on the build out side than we are on the demand of AI. So again, that is creating some confusion because it's not a bubble in the sense that we've built too much and it's not getting used. It's we're using AI so much that we can't build fast enough. And that's a weird dynamic, right? But generally, in my opinion, the way that what that means is that's a bullish setup. There's more demand than there is supply, right? That means there's lots of opportunity on the supply side, right? So either there's going to be new businesses that are created, regulation is going to change to support this so that it can catch up. I don't know what else we're going to do, but we're going to be able to spend more to try to build more on the physical side, which is good for the economy, right? It's good for jobs. We need more people to build these buildings and build the solar panels and the, whatever else. So to me, I see opportunity in that, whereas I think some people are just kind of uncertain of what this all means at the moment. And I think that's why the AI trade is getting a little bit murky at the moment.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
Kyle, people can find your AI thoughts on our new Milk Road AI show. This week is going to be your first interview. And last week, your co-host on Friday Roll Up, Duncan, interviewed Mike Novogratz from Galaxy, and that's a perfect company that you're talking about that has these types of capabilities. And then you guys last Friday, you did your first Roll Up episode with Duncan and Patrick. Can you give us kind of the Coles Notes alpha from that episode and what you guys kind of learned or shared with the audience?
Yeah, so the big thing on that is you guys should definitely check that one out. We went through all the different layers of the AI stack and how you can invest. And so by layers, I mean it starts at the very bottom, which is like energy, right? So you need energy to power the next layer, which is data centers, right? And the data centers, they hold all the GPUs and the chips to process all the data that we have, right? And so that's your next layer. And then from that, you have LLMs. So that's your like OpenAI, your XAI, all that, right? Which is that's just basically your models. And then you have the apps on top of that. And there's two versions of apps. There's like your physical apps, which would be robots that are using AI. And then your software apps, which could be like your ChatGPT or your Sora 2 and all the like things that are being created that we use, many of us use online. So we kind of walked through all the different companies and different layers within that, which was very interesting. And again, the most bullish part of most of that was kind of the physical side of it. So the data centers, the energy, because again, there's just so much demand there. That's where the big bottleneck is, which means we've got to change regulations to make that go faster. Likely that's going to push prices of those things higher. There was a tweet that someone put out recently, which was they were saying like, I think a lot of factories around the US, which build anything, they could build, I don't know, drywall or they could power like whatever, you name it, cars, like anything. He's like, I think a lot of those guys that have these big, huge centers that already have data, not data, energy from the grid, they're going to pivot and they're going to shut down their existing business and they're just going to go sell their plants and their energy to the AI hyperscalers, right? Because that's how much demand there is, because they know they can make way more money. So again, not great for whatever industry is going to shut down there or whatever company, But it's kind of like what happened with the Bitcoin miners, right? They were mining Bitcoin. They realized, oh shit, why don't we just go make 5x the amount of money we're making if we just go and be an AI data center rather than a Bitcoin one? And boom, they did that. They were the first ones to do it. I think you're going to start seeing this more. So I think there'll be ways for this AI demand to catch up on the supply side. And that's what's going to continue this bull market further, because there's still a lot of innovation. There's still so much thirst in the world, whether it's from companies or people, to use and experiment with AI, that there's just, I don't think that can be over yet. There's just still so much for us to do there. So anyway, we talked a lot about that. We're going to go over that a bunch this week on the roll up, which always comes out on Fridays. So we're really going to dive into kind of the bubble side of things and where the bottlenecks are, I think, on this week. So it should be a good one.
You guys can check it out on YouTube. It's Milk Road AI, of course, available on YouTube, on iTunes and Spotify. And you can also sign up to the newsletter, which will be coming very soon, which will cover these topics a lot more in depth, and we'll also have a pro component down the line. Kyle, let's wrap this up by coming back to crypto. What if any moves are you making in your portfolio? How are you approaching things going forward? Going into, I mean, at this point, might as well just say going into 2026.
Yeah, absolutely. So look, I think I don't know if we go down from here or up. Who knows in the short term? But I think we are nothing more than a pullback. And pullbacks, remember, in Bitcoin can go to, right now it's 25. It could go to 30. It could go to 35. It could go to 40. It could. We tend to have these big pullbacks, and so that's fine. Expect those. We've been saying this entire bull market it's going to happen. I think we've had now, was it 6 pullbacks of more than 25% since January 2023. So like, we're in, not uncharted territory by any means at the moment. And so when I see moments like this, what I want to do is position myself for what is the next leg up in these markets. And so on the crypto side of things, I think it's institutions coming in and building / allocating to the crypto space. Okay. And so if you think of institutions coming into crypto, what does that mean? Well, many of them are building. They're bringing their, think of banks, think of like funds, et cetera. Think of what they do in their normal world. They're trying to move that on chain because it's more efficient for them. It's more cost effective, right? They can get more profitable by moving their funds on chain, by moving their stocks on chain. Not only is it more profitable, but it's a better experience for the users. And so that's the big trend that we are seeing in crypto right now. Okay. It's not necessarily like digital native like use cases. It's taking the old world and just putting it on chain so that it's better, right? That's stablecoins is the breakout app use case that we have in crypto. That's not something like crazy new. It's just $1. It's just when it's on a blockchain, it's way better for both the company and the person. The rest of the financial assets and financial services are going to move on chain as well. We're seeing it with Robinhood is bringing their business on chain. Coinbase is bringing their business on chain, right? And you're going to start to see this with banks, with funds. Galaxy's already started to do this. And so what I look at is when all these institutions get that market structure bill, some of them are already doing this without market structure, like Robinhood. Many of them are waiting for clarity. So when they do get approval, and many of them are already having these discussions, where are they going to go? Well, they're going to go to Coinbase and Galaxy, because those are the two most trusted institutional crypto companies in the US. Right. Now, I don't know on the Asia side. I'm sure maybe there's, I don't know, OKX or Binance or something. I don't know who does it over there. But if you think of the American institutions, as they come in to use crypto, which we know they will, they're going to hire Coinbase and Galaxy to do whatever it is they're doing, whether it's helping them build, whether it's using their wallets, whether it's custody, whatever it is. And so I remain extremely bullish on those companies, and I continue to buy them when they have big pullbacks like they do today. What chains are they going to build on? Probably Ethereum, or definitely Ethereum, because it's already happening. Probably Solana. So there's your 2 assets you might buy, right? And so I continue to be bullish on those. Outside of that, there's not a lot that I'm super, super, super excited for. There are some like revenue generating DeFi stuff that is pretty cool. But again, that's going to take a bit, I think, for this market structure bill and to get allocation there. So I just continue to buy things that I think will enable the next big leg up in crypto. And I don't mean leg up in price. I mean leg up in adoption, right? And that leg up in adoption is not retail like everyone thinks. You guys got to stop thinking about what is retail going to do next. Retail's not doing shit next because they're all broke, right? Fucking AI is taking their jobs. They're not getting wage increases. They're all in debt. They're just trying to buy a home. They're not fucking punting meme coins anymore, and they're definitely not buying like mid-sized, tokens in crypto because they can't afford it. They don't have anything. Now, maybe when we get that $2,000 stimmy check, if we get that, you might see a short-term pump. But right now, what's going to bring crypto higher is institutions coming and building and allocating. And so you've got to think of where can you get ahead of that. And to me, that is your Ethereum, that is your Coinbase, that is your Galaxy. So I remain bullish on those and hope that that plays out at some point. I don't know when. It could be January, it could be February. I don't really know. And then the other side is like, look, AI is obviously changing the world really fast here. And so I think it's important to try to understand what's going on over there, because that affects your crypto bags too, right? A lot of AI is what's going to be using blockchains and stablecoins, et cetera, in the future, AI agents. And so if you want to understand where the world is going, well, you need to understand AI. And so that's why we launched this Milk Road AI podcast. We're soon launching the newsletter because I think both of these should be very, very important parts of your portfolio. You should hold crypto. We're obviously very bullish on that. And there's lots of upside there because it doesn't have regulatory clarity. AI does. And so it's a little bit more crowded already. It's a little bit more well understood. The companies that, are crushing it in in AI are like Google, Nvidia, these are like $1 trillion companies. Whereas the ones crushing it in crypto are like Coinbase, which is like, I don't know, 100 billion, maybe $80 billion company, right? So the risk reward is probably better in the crypto side, but it's also way more volatile because there's so much, they're so small. So you got to understand, like, it's good to hold AI and be a part of that and understand what's going on there, and then good to continue to hold crypto, again, as long as the macro supports that. And right now, even if something bad happens with unemployment, we still got a ways we can go down in rates. We still just ended, we don't even ended QT yet. QT's ending in December 1st. So like, there's still so many more tools in the tool belt for the central banks and the governments to stimulate the economy and drive assets higher. This isn't like we're already at 0% interest rates and we're already at, printing a ton of money, and yet unemployment is going through the roof. Like, that's not what's happening, right? So there's still a lot of things that we can do to keep this cycle going further. And so when you know that that's the backdrop, you just got to say, what are the technologies that are getting adopted the most right now? And I think that's going to be crypto and AI going into 2026. So I remain very bullish.
It's a hot rant, man. That is a hot rant right there to wrap us out. Kyle, thank you for your thoughts. If you guys honestly want more access to Kyle, he's writing pro reports. He's accessible in the Milk Road Pro Discord, and currently hosting our Milk Road AI show. The next one is coming up this Wednesday and Friday, so 2 episodes per week. So make sure you guys check that out. And obviously follow Kyle. Check him out on Twitter. Kyle Reidhead is the handle. Kyle, good to chat with you again, man. Always love doing these shows, and I think our audience really enjoys it and loves getting clarity from the head honcho here.
Thanks, LG. It's fun to come on for listeners and LG. Everyone just relax for a little bit here. We might go deeper down. Things might get even more red. Let's just let it play out. It's all good. Crypto, we're not in a world where crypto's going to zero anymore. This is not going to happen. I mean, unless you're buying some dumbass meme coin or whatever, like probably that's going to go to zero. But like if you're in good assets, we don't need to fear that, oh my God, is it going to go to zero? I got to get out. That's not the world we live in anymore. This isn't 2021. This isn't 2017, right? Like the dynamics are way different. So we don't need this much fear in markets anymore. We can just accept the volatility, because if you want 100% gains in a year, right? Like Bitcoin's up, I think 500% since 2023, sorry. But it's gone, as I said, it's had these massive pullbacks each time. And so like, you need to just be okay with these if you want good gains. If you don't want 100% gains, and you don't want to be around with this volatility, just go buy the NASDAQ or the S&P 500. You'll only get maybe 5 to 10% a year, but you'll never get a 30% pullback. So I don't know, just choose what are you okay with,
That's what the Milk Road's here to help us navigate that. And thank you for singling me out as one of the people freaking out.
No, you're good. You got strong hands.
You said all, you people and LG specifically. You got me. Cool. Kyle, thank you for coming on the show. We'll be right back here on Milk Road Daily tomorrow with another great guest. And I'm sure we'll see Kyle again soon.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.